Hey folks, welcome to the Pipnotic Symposium on the 4th of June 2024. Today we're going to talk a little bit about how to use the asset strength reversion correctly. There was a comment that came in Discord from a gentleman saying that the ASR took a trade that looked a little bit peculiar. So we're just going to talk about that, address the reasons for it doing so, and then I'll present a solution that will stop it from doing that, because we don't want that. We don't want bad trades. We want good qualified trades. And the ASR is written in a way that it will look for bad data, and if there is bad data, it will just skip whatever it is it's analyzing. And the conclusion is then that there's not enough data to make this decision. We'll look for something else. And so if your robot is not trading, your instance of the robot isn't trading, it could be because there's not enough data, so the algo is just skipping a lot of stuff. So you want to ensure that you have good data, and it's not difficult to do. It just requires that you do a couple of things, and we'll talk about those now. So what I like to do in the current configuration that we can see here, we have a couple of settings. I like to trade the 1 hour and the 4 hour chart with the enable histogram alignment set to true. And so with this, we need the data from 3 time frames. We need the 1 hour for the entry time frame. We need the 4 hour for the entry time frame. But we also need the 4 hour for the confirmation of the 1 hour. And we need the daily for the confirmation of the 4 hour. Okay, because when we're looking at multiple histogram on multiple time frames, we need these to be aligned. And so you need the data, complete data, for 1 hour, 4 hour, and daily. And if you're using the 1 hour to the daily, well, then you need 4 hour. You need the 1 hour, the 4 hour, the daily, and the weekly, because the weekly is going to be the confirmation time frame for the 4 hour entries. Okay, this is super important to be mindful of. Okay, so in this current situation, the current configuration, when the enable histogram alignment is set to true, which it is per default, we need to see these 3 time frames here. We have the daily, the 4 hour, and the 1 hour. Okay, and the way that I ensure that I have data is I take the currency strength, the GFX. I'll just move that on there, and I'm just going to leave it in the default configuration. I press OK, and I do that for all of them. Okay, and what you'll notice, I'm not running the robot on this time frame, sorry, on this terminal. I'm running it on a VPS. But what you'll notice is when I go like, you see, now they're loading, and you can notice that the lines look a little bit weird, don't they? This one looks a little bit better, but it still looks fishy. You can see it's still updating, and that is telling us that we do not have data. And if you look here, let me move this up. If you look here, you can see that this value here is increasing. That means it's downloading data from my broker's server, and it'll keep doing that every time we get a new tick or the algo execution interval iterates. It'll go and it'll look for new data, and it'll keep doing that until we have all of the data. Okay, so this value will continue to rise. Here we have, was it 14 megabytes? Now let's click again. There you go. We're downloading more and more and more, and you can see slowly but surely these lines, they start to spread out. They start to look more and more reasonable, and this is because the data that we need in order for the algo to run is being downloaded, which is essentially a lot of the data that you can see here, a lot of the price data for the currency pairs that you can see in the market watch. And this looks relatively normal just here. So what we need to do is we need to just make sure that we have that. Okay, so when the algo is running, it is finding all the data that it needs to make really good trading decisions. And so what I have on my VPS is I have each terminal that I have running the ASR. It actually looks like this, where I have the daily, GFX 4 hour, GFX 1 hour, and the GFX in the configuration that you can see just here. And this is the most recent version. As a matter of fact, the most recent version is 1.086. This is just a version that I'm currently working on. Okay, so this looks good now. So now, if we turned it on, it would actually say, okay, we have enough data, we can open more trades. Okay, and some more comments came in regarding the frequency of the algo taking trades, and a lot of people have been asking, well, mine's not taking trades. Well, one of the reasons could be that there isn't sufficient data, so you have to do what I just did to make sure that you have sufficient data, and that'll move you along to the next step, and that is that maybe the configuration is keeping it out of trades. And so we can just have a quick look at some of the configuration parameters that would prevent the asset strength reversion algo from taking trades. Okay, so if we look here, inputs, there are a few values. One of the values, this is probably the most important value, is the modifier. If the modifier is set to 1, let's say 2, for example, which it shouldn't be, this means that price has to, rather the histogram has to be at such an extreme before it enters trades. And in many cases, it's not at an extreme. Many cases, prices are just kind of going about their business. You know, we have a bull cycle, bear cycle, bull cycle, bear cycle. You know, they look like this. They look like that. Okay, and so they're not reaching these really high extremes. But it doesn't mean that prices aren't going higher and lower and higher and lower and higher and lower. It just means they're not going really high and really low. Okay, and so you want to put this on a value that is more reasonable. And default, I think if you put it in like 1.2 or 1, if you put it over 1, I think you'll probably be in good shape. If you want to scrutinize it a little bit more and just maybe cherry pick some of the better entries, you can put it at 1.2 or 1.3. But I wouldn't go above maybe a 1.5. And in some of the older versions of this algo, I had it set to 1.618. And you may ask, why did you put it on such a value? And the answer is because I like Fibonacci numbers, but it's not necessarily the right answer for the algo. And so you have to remember that, let me just try and explain this properly, that yeah, while prices, let me get rid of this so I have a little bit more black space for some art. So here, so we have, as a matter of fact, I'm just going to use the histogram. I've got it right here. Okay, perfect. So here we have the histogram. Okay, and we have here we had the histogram that went below the red line. That means it's time to buy. It went above. It's time to sell. Okay, and most times prices, what we're looking for is we're looking for a smoothed, like a smoothed out histogram. Okay, and so we're looking for prices to go up and then begin to turn around, or down and beginning to turn higher like that. Okay, so even if the entry, the sell zone is here and the buy zone is here, we're not doing anything until we begin to move back in, kind of revert to the mean, both positively and negatively. Okay, we're not doing anything until like around here or around here. Okay, so we're kind of doing it. We had the first pullback there. Here we had the first pullback just around here. So even though we're really far up, maybe this is a 1.2, and we're not doing anything until we get around here. Okay, and so the normalization of the histogram data, which is what both the histogram and the ASR are doing, they're normalizing the data, which means that they're trying to make the data look normal relative to other data points. That's what data normalization means. It just means that you massage out the outlier data that kind of doesn't fit the average expected values for a given data set. Okay, the normalization makes sure that it adheres to this kind of behavior, what we can see here and what we can see here. So even if you put it on 1, then it's fine. But what I wouldn't do, I wouldn't put it on a 0.5. You can, and I know someone who's doing it and they're doing it very well. But if you have 0.5, let's say the line goes like that, and then you have the histogram goes above, then it pulls back, and then it pulls back again, and it kind of does something like that, which is very common. Maybe it would have decided to sell here when in fact prices were not overextended and they weren't premium, and so prices just had another leg higher. If this line is too low for selling or too high for buying, it's just going to get you into trades too early. Okay, so you have to be aware of that. That's kind of important. But on the other hand, if you're getting this line and you're kind of moving it up, stretching it out of it, let's say this is 0.5 and this is 1.2, just to use a round number, we're getting that turnaround point a little bit later than we did had that value been 0.5. Okay, so I would put it at least 1.0, 1.2, 1.337. I like that number because I see it all over the place. But you can just make sure it's above 1.0, and if you have like a number, a favorite number, you can put it in there. But I would keep it below 1.6, 1.7, 1.6. I would probably keep it below, because while once or like 1 to 3 times a month you're going to get smoking trades based on the 1.6 or even a 2.0, it's only going to happen once or 1 to 3 times a month. But if you have it on 1.0 or 1.2 or 1.337, you're going to get way more trades, and they're still going to be good enough to justify an entry. Okay, so just keep that in mind. It's really, really important. Okay, that is updated. Let me get rid of all of these because this is running on my VPS, and I just want to show some of the trades this is getting on. So I have this running on 3 live accounts. I think accumulated we have about maybe $25,000, I think, running on between these 3 accounts. And what I'm noticing is I recently started doing, this is a brand new account. I opened it I think 3 days ago, but I started seeing stuff like this where I get into a trade, and this is something that we've been speaking about in the beta group and in the general forum and Discord, where we get into the trade. We got into the trade right here, and this was a target. Oh gosh, sorry, we got into the trade here, and this is a target. The prices often go way beyond the profit target, and I'm seeing this a lot. Here we had a trade. We had another one here. This is American dollar, Canadian dollar, and this was a short. We got into the trade here. The stop is here, and we got out here. But in fact, price went all the way down here. Okay, and I'm seeing this, and I'm hearing this from other users, that this is happening a lot. Okay, this one was here. We got in. I closed that one out early because we were at supply, so that was kind of a manual. Actually, we would have hit the target because the target was right here. But maybe this one would have been a loss. Maybe we would have got stopped out here. That's okay. It's okay to lose trades, especially when you get the big ones like we saw here. Okay, and we had another one here. This is the same trade. That was the other half of that one. But today, this is actually from yesterday, we had a trade here where we got into the trade. We got into the trade right there. Let's say the stop is here, and we got out of the trade here. Okay, so this is, I actually changed the risk reward on this, and I widened the target, and we hit it on this piece right here, on this one right here, on the second half. But I manually got out on the first half here, which is exactly where we have the sell zone right there. Okay, so I got out that manually, but prices kept going, and I'm seeing that a lot. Okay, so prices are often going very, very far up before they turn around. Okay, and so what I'm trying to say is, historically we've been, or the default configuration has been, we're risking 3. God, this is a difficult mouse. Let me borrow my son's mouse pad. Oh, that's so much better. So we're risking 3 to obtain 1. So this is a risk to reward. But now I'm seeing that we can risk 3 to gain 3, or even more, maybe even 5 or 6. I'm seeing this a lot, and so this is beautiful, and this is music to my ears and Van Gogh's to my eyes, And the reason this is happening right here, and we're seeing less of this, is it's ever since the introduction of this ensure histogram alignment. And the reason this is happening is because when we decided to get into this trade last night right here, when we started to go north, the cycles on the bigger time frames are much bigger than they are on the smaller time frames. And so when you look for an alignment in the cycles on the smaller time frame relative to the bigger time frame, the moves are much bigger than mere zigzagging higher and lower like you would see if you were just focusing on a small time frame. And so ever since the introduction of this setting, these are the kind of results in the trades that we're starting to see, which is fascinating because we really don't want to risk more than we want to win. And the reason is, and I've seen this many times before, that you can have someone who says, I have a 98.9% hit rate. What does that mean? That means that they're winning almost 99% of their trades. That's really good. That is really good. But what they're not telling you is that each winner is $1 and each loser is 67, for example. Okay, and so this is when you see these equity curves that go like this. They go up, lots of little winners like that, and then boom. They do that again, boom. And one loss takes out 67 winners. And that is, it's heartbreaking, number one. Emotionally, it's devastating, number two. And number three, if you're trying to pass a prop trading challenge, or you're trying to get some money allocated to your account, this kind of margin volatility is going to ensure one thing, and that is failure. Because nobody is going to give you money if you're risking if you're risking $67 for the opportunity to win $1. It's never ever going to work. But it'll work for a long time, work for a very long time, until it doesn't. And then this happens, and you lose all of the profit from these trades in one go, and that is devastating. So I recommend that you try the new configuration, the one that I showed you, that you try to set this to true. You set this to a reasonable value, and you set the risk reward. This is a 1-to-1, which is fine, or risk reward. We're risking 3 for the opportunity to take 3 out of the market, but essentially that's a 1-to-1 because 3 is equal 3, or maybe even more, maybe 5. Okay, because you do not have to win 98.9% of the trades. You just have to win, maybe 50% of the trades or 40% of the trades. Because if you know that the winners are going to pull in 3, 4, 5 times as much, what you're doing essentially is you are turning that graph that we just had, this one, upside down. And so you have loads of tiny losses, one winner. Loads of tiny losses, one winner. Loads of tiny losses, one winner. So if I do that down here, it's not even going like that, it's going like this. It's going super quickly higher. Okay, so what does that look like? I mean, that's beautiful. To the moon, that's beautiful. And so you want to look for stuff like that. That is really good. So it's okay if you lose more than you win. You just need those winners to be big enough to compensate for a string of previous losses. This is the most important metric, I think. And if you're analyzing a system and you want to see, is this profitable? Is this not profitable? Is it sustainable? Is it not sustainable? one of the most important metrics you can look at is average winner to average loser. This is very important, and you want your average winner ideally to be bigger than your average loser, because then you know over time things are going to equal themselves out. And if we have a hit rate that is more than 50%, well, then everything is very, very good. Okay, but does not mean, of course, that you can't have a system that does this, and then goes down, but you just don't want it to be too much down. It's okay if it does like that, and we give back maybe 6 winners for 1 loser, or sorry, 6 winners for 2 losers. So if we lose 2 trades, we wipe out 6 winners. Because if you are operating at 83% accuracy, like I know, I've seen statistics from Andrew, and he showed me the statistics that his instance is running, and he's got it running in a really unique configuration. Matter of fact, I'll share his configuration with you. He has this set to false. He's not doing that, set to false. And this is 3, I think. Sorry, that's not true. I think it's set to 1, and this is set to 3. So he's risking 3 for the opportunity to win 1, or something like that. I could be wrong, but the risk is bigger than the winner. But he sent me a message the other day. He had 24 winners, and he had, out of 24 trades, he had 21 winners. Okay, so if you're winning that much, which you are, which for him was 83% currently with his stats, I mean, you're still gonna be earning money. What you don't want is you don't want it to get too out of control. You have to find a balance, and I think Andrew's managed to find a balance, as have many of the other users in the room. Good. All right, well, I'm gonna wrap it up with that. That's 20 minutes, but if you have any questions about this, please let me know. We have come really, really far with the ASR, and some of the updates that I've made over the past, I mean, not more than maybe 2 months ago, have caused the results to go through the roof. And just for your information, collectively we have well over $1 million of live money running on the ASR amongst all of our users collectively. So it's a lot of money. So people believe in the ASR, and I believe in the ASR, and I'm seeing it do some really cool things, which makes me super, super happy. And I really hope that you guys are experiencing the same, because it's not rocket science. All the difficult stuff has been taken care of. It's a matter of making sure you have data, being realistic, ensuring that the parameters configuration is reasonable. It doesn't have to be perfect, it has to be reasonable. Even when it's reasonable, it's going to do well. Just make sure the configuration is decent. We have good data. You have a good broker. Don't use garbage brokers. Use proper brokers with tight spreads, limited slippage. You don't want to be spread it out overnight. You want to use a top tier broker. You know, a broker like, I'm using FP Markets, which I really like. It works very well on FP Markets and IC Markets. Pepperstone is another good one. Ultima Markets is also working very well. There are some really good brokers out there that we can see. And currently, what I'd like to do is I'd like to make some more data collection so that we're able to extract data from each terminal, so we know what the broker is, and then if we can in some way find out the profitability or maybe the state of the spreads, you know, slippage, get some statistics related to slippage and spreads and whatnot, because this affects the algo. Because if the spreads are terrible, the algo is not going to open trades because of the filters, the risk mitigation filters in the configuration. If the spreads are rubbish, it's going to pass on the trades. And if you have a crap broker, and there are many, many crap brokers, then you're simply not going to get in any trades. Which is a good thing, because bad spreads are very, very bad for your bottom line. Okay, good. 24 minutes. I'm going to leave it at that. If you have any questions, please let me know. And thank you so much for watching.